Economic situation for Latin America as the recession continues. The cure appears Latin America's corrections for low commodity prices and domestic political turbulence in each country continue to shape the region's growth performance and short-term outlook. In Brazil, the figure shows that the recession continues to decline in the third quarter, after the GDP fell to its lowest in a year in the second quarter. In Argentina, where recent economic recession is taking place, recent economic indicators indicate that production will stabilize. The foreclosure economy in Mexico continued to expand in the third quarter, but showed that the rate of expansion was weakest in 2 years and that the economy remained low. On the other hand, the Peruvian economy continued to grow steadily, driven by supply-side factors, such as the ripening of large-scale mining projects. Chile and Colombia, which are strong regional outposts, showed signs of losing momentum. The decline in regional growth will worsen this year in low commodity prices, where global growth and volatility in financial markets cease. Latin America is projected to contract 0.6% this year after stagnating in 2015. Economic growth is expected to decline to 1.9% in 2017 due to the bottoming out this year and the global economy's gradual acceleration and global trade strengthening. Downside risks for the outlook remain on the horizon. Risks in the external economy may take the form of a weak growth in the U.S. economy and a shift in consumption-oriented economies, which could delay China's export recovery process. Financial risks may be due to signs of an upcoming U.S. election, the market reaction to the possible federal interest rate in December, and a less favorable monetary policy in other developed economies. When we look at the countries in the region, economists say that 7 of the 11 economies surveyed, including Brazil and Mexico, have maintained their growth forecasts in 2016, which together accounted for about 60% of the regional economy. The prospects for growth for Argentina and Venezuela were again deteriorating this month. The only economies in which analysts raised their estimates were Ecuador and Paraguay. The decline in regional growth will worsen this year in low commodity prices, where global growth and volatility in financial markets cease. Latin America is projected to contract 0.6% this year after stagnating in 2015. Economic growth is expected to decline to 1.9% in 2017 due to the bottoming out this year and the global economy's gradual acceleration and global trade strengthening. Downside risks for the outlook remain on the horizon. Risks in the external economy may take the form of a weak growth in the U.S. economy and a shift in consumption-oriented economies, which could delay China's export recovery process. Financial risks may be due to signs of an upcoming U.S. election, the market reaction to the possible federal interest rate in December, and a less favorable monetary policy in other developed economies. When we look at the countries in the region, economists say that 7 of the 11 economies surveyed, including Brazil and Mexico, have maintained their growth forecasts in 2016, which together accounted for about 60% of the regional economy. The prospects for growth for Argentina and Venezuela were again deteriorating this month. The only economies in which analysts raised their estimates were Ecuador and Paraguay. Argentina positive signs are beginning to emerge. The economy continues to be deeply researched as a result of the government's austerity measures, the decline of real wages and a weak demand for Argentine goods. While the economy was expected to contract again in the third quarter after a 3.4% decline in the second quarter, some positive signals began to emerge in recent months. The decline in economic activity softened in August and consumer confidence continued to rise in October. Moreover, international reserves have risen to the highest level in 3 years in October due to the improvement in business sentiment. However, the pace of fiscal consolidation is an important challenge for President Mauricio Macri. In October, the government resumed the gas subsidy cut-off after the original Supreme Court canceled the Supreme Court in August, but this time the slash that was initiated began to be implemented in small scale and more gradually. This year the economy was disturbed by the government's austerity measures and a weak external sector. In 2017, the country will return to growth after the 2017 general elections and due to reviving public spending after recovery in Brazil. The panel lowered its GDP estimates by 0.2 percentage points this year and now expects the economy to fall by 1.8%. Analysts expect the economy to increase by 3.2% next year. Brazil. The lower house approves the spending limit. Brazil's battered economy is slowly recovering. Monthly data show that although the data remained poor, The recession continued to decline in the third quarter. Industrial production retreated and current account deficit remained moderate in September, but retail sales continued to fall in August. Leading indicators for the fourth quarter continued to show some improvement. Consumer confidence improved in October and the PMI manufacturing industry was the best result since January. Meanwhile, the government is making progress in fiscal reforms. The month we passed the constitutional spending limit was spent under the subcommittee and you were faced with 2 votes in the Senate first. The government also expressed its intention to reform a pension in the first half of 2011, although the details of its design have yet to be revealed. While this progress is promising and points to the stabilization of the political circle, the political sphere remains complicated. In October, the leading member of former Michel Tegner's party, Eduardo Jr., was arrested for corruption charges. The decline in GDP has already fallen, but austerity measures, rising unemployment and tight credit conditions will keep the economy in a deep recession this year. Focus Economics consensus forecast analysts predict that in 2016 the economy will fall 3.2%, which will remain the same as last month's impression. The panel expects next year's GDP growth to expand by 1.0%. Colombia vertical line. The government faces financial opposition to fiscal reform following a sharp slowdown in the second quarter. The Colombian economy remained weak in the third quarter. Exports in September fell by 5.6% year-on-year and consumer confidence worries remained pessimistic. In August, retail sales contracted for the first time in 5 months, while industrial production recovered due to a base effect after the end of a strike by a trucker. The government presented the ambitious fiscal reform to Congress on October 19 to address the impacts on the struggling economy and public finance. The expansion of the personal income tax base includes the addition of value-added tax and the simplification of corporate tax. The reform is designed to compensate for the shortfall in oil revenue and the government aims to return its incomes to pre-oil settlement levels by 2022. The proposal is likely to face a strong opposition in Congress after the government-backed peace treaty has been rejected. Analysts expect the economy to grow 2.1% in 2016. Which does not change from last month's forecast. The panel plans to grow by 2.6% for 2017. Mexico vertical line. Economic growth passes less the test. According to preliminary data, the Mexican economy continued its worst year-on-year growth in the third quarter for more than 2 years. Although overall economic activity continued to be supported by the agricultural and service sectors, the industrial sector was dragged down largely in the third quarter, with extremely poor performance. Entering the last quarter of the year, the data suggest that the economy is moving slowly. 1 week before the U.S. presidential election, the peso was severely volatile, while Hillary Clinton's advantage over Donald Trump narrowed and boosted the likelihood of a tight result. Economic growth is slowly losing dynamism due to various factors. Government spending is shortened, manufacturing industry output remains weak, and political uncertainty and general insecurity affect the consumer confidence in the country. As a result, analysts surveyed this month have left the country unchanged this year, and expect the economy to grow 2.1%. Next year, the economy is predicted to decline by 0.1 percentage points to 2.3%, compared with last month's forecast. Inflation. Regional inflation fell in September after the rise last 17 months. Inflation in the region is moderating because of the more favorable evolution of the currencies and a negative output. A complete dataset shows that for the first time since March 2015, inflation in Latin America fell in September. Inflation in the region fell from 24.1% in September to 25.3% in August. With the exception of the exceptionally high inflation in Venezuela, Latin America's inflation rate fell from 9.6% in August to 9.4% in September. We expect inflation to rise towards the end of the year and analysts to end at 26.8%. The forecast for this month was revised down from the 28.1% expected last month. Latin America's forecast for inflation excluding Venezuela is estimated at 9.1% towards the end of the year. Next year, the forecasts expect general inflation in the region to be around 25.5%. Latin America's inflation rate is expected to reach 6.2% by 2017 to offset Venezuela's inflationary effect.